back to another episode of Stockommon Cents. Took off last week, but I can't miss this week, so I want to make sure I give you guys the latest and greatest information that we currently have. You guys can see my screen. I'm going to get y'all set up. You see my screen, we're currently showing this. Let's do this. There we go. I want to make sure you guys can see my screen. So, without further ado, let's go ahead and get started. S&P 500 opened the week last week at 41.30, and we closed at 41.20. Actually, we closed last week at 41.31. Ended up closing the week at 41.23. So, I'm sorry. Opened the week at 42.55, and then we closed the week at 41. So we're down 1% for the week. Like I said before, this is our resistance line. For us to hold this line, we have to be able to close above this line. As of today, Monday, May 9th, we closed at 39.91. Below that line. This line, just to be more official, is around 40.50, right? Around 40.50. Now, this bar right here is a current bar today. Again, we want to close above this line. In my groups that I am loading the boat on any items I like. Excuse me. So I've loaded up on SPY. Can't afford those. You can load up on SPYG is another one I like. Again, this isn't financial advice. I'm not a financial fiduciary. I'm just letting you guys know what I'm currently doing within my portfolio, and those close to me. So whatever you do, once again, that's all on you. But I do like this area a lot. Reason being is we do have a lot of fear going on. Let me show you this index. I'm not sure about it a lot, but this is one that I love. So this right here is the volatility index, basically the VIX. Anytime these levels have gotten elevated, there's been high fear within the market. Now, one level that I like within the VIX is typically 36%, or it was whenever it hits 36, right? Anytime it's hit 36, so this line right above here, you've seen sharp rejections going down, right? The only time it didn't do this was in 2020, right? We were still getting out of the recession. Anytime you've seen it hit, there have been hard rejections. So there might still be some more downside here, or it might be some more downside here. S&P 500, but I do think right, the same issues going on. We do have inflation, we have the war in Ukraine. Prices are going through the roof. People are freaking out, and again, we do have midterm elections. With the midterm elections, I'll talk about what happened in a few. But this is where you get it. This is the time where a lot of people are currently fleeing the market. This is a time where you want to jump in and gain profits from people being fearful. So another reason of selling is the old adage of sell in May, go away. Typically, a lot of times you'll see people leave their accounts in May, or they sell their accounts, go on vacation, go spend time with family, and then come back around the school year, like around September, October. So just be aware of that. I think, me personally, I think the market is oversold. I do think we will start moving our way back up into regions that we like. And then from there, we'll see what happens. But once again, it's S&P 500, currently down 3.1%. If we go ahead and move to the 1,000, like I predicted a few months ago or a few weeks ago, once we broke this level, the next place we could go would be right here, which would be 70 or 1745. And if you look, this is today's bar. We got really close. We got to 1750, right? 1754. I do think we are oversold once again. For the week, they were down 4.86%. So we did have a massive drop from our highs back in November. Massive, massive, massive. So this is something that I want you guys to pay attention to. Once again, this is 2000, which typically has smaller stocks that aren't in the NASDAQ. But once again, I think this is a time where we'll start to see a nice reversal within the next few months, and then we'll see what it takes us. Now let's go ahead and get to things that have happened, things that are currently affecting the stock market or current stocks. First one, that dreaded Johnson & Johnson shot. So if you remember, whenever we had the Johnson & Johnson shot was the one that all you needed was one shot for you to be good. Now, the FDA is now kind of reversing that course and is currently limiting the Johnson & Johnson shot to emergency use only. This is for people 18 and older whom vaccines aren't appropriate or accessible. The reason is that the change is being made because the risk of rare and dangerous blood clotting conditions that is currently going on within the Johnson & Johnson. It's kind of a little too risky just to be having this vaccine out there. So they're making it on an emergency case only. So it's not as recommended compared to the Pfizer shot. That could have a hit on the Johnson & Johnson. I know a lot of people are expecting them to have high revenues off this. If we were to look at the chart, okay. Here's their chart from this year. Got to as high as 186.69. Closed today at 117 or at 177. So they have a nice run up for the year. We opened the year at 170, so you would have made a nice $7 gain year to date. So not a bad stock to look at. Not a bad stock to look at for those who are interested in the stock. 2 years ago, back in 2020, back in October, did hit a low of 133. But again, this is something to watch for. Once again, a lot of stocks have gotten hit hard, been re-rated, but Johnson & Johnson still holding. The next thing that occurred, is the Fed raised the interest rate by 0.5%. Now, if you've been watching every episode, you've been hearing that the Fed is trying to do their best to curb inflation. Inflation has been at all-time highs. I believe we have an estimate. We have a CPI estimate this week at either 8.6 or 8.1. Month over month or year over year. So with news and rates like that, whatever they can to reduce, do whatever they can to reduce the rising costs, whether it's real estate, gas, food, utilities, things of that sort. Everything is jumping to the roof. So they want to do what they can. So by increasing rates, they want to cool down the market by making it harder to borrow money and more expensive to borrow money, which then will cause consumers to reduce their spending. Whenever you have consumers reducing spending, you then have the demand of items coming down. So it is something I want you guys to watch. Now, the reason why this is important is that this is the first time in 22 years that the central bank has raised rates by this much. First time since, I believe, first time in 22 years. So that is something that we will be seeing. Here's a nice little chart that shows you where our rates have been. Blue line is everything, or the blue line is the federal funds target rate that they wanted to get to. Now, if you look here, this was pre-pandemic around 2020. And then from there, we dropped it basically down to 0. We are currently at 1% right now, only 1%. If you look, this has been a decreasing, line ever since what, near 2000 or in 1982. So we're typically around this average right over here between 10% and 5%. Between 10% and 5%, with each of the gray lines showing a recession. So if you look, anytime we've had a recession, we've had a steep decline in rates. So once again, they are looking to raise the rates to make it higher or to make it more expensive to borrow, basically cool down the economy. Now, another thing that's affecting the market for certain stocks is Ford vehicle recalls. So I'll go ahead and pull this up for you guys. Ford, which is, no, I'm not gonna get into Ford. I'm not gonna. If you like Fords, that's cool. That's all on you. I'm not me myself, I'm not a Ford guy. But again, it is what it is. And this, if you are a Ford person, this doesn't make your case. Up to $250,000 or up to $250,000 of Ford Explorers recall from motor rates. So what this basically means is that Ford Explorers are being recalled due to mechanical problems. Basically, what's happening is even if you have your car in park, it will roll away according to certain documents. The document said that a bolt in the rear axle mounting could fracture and cause the drive shaft to disconnect, increasing the risk of a vehicle accidentally rolling away while parked, even when the parking brake, I'm sorry, it can roll away while parked when the parking brake is not. I know for myself, I have a tendency of not always putting on the parking brake whenever I go somewhere. I mean, it just is what it is. But if you do have a Ford, you could be having major issues with that. This affects Ford Explorers from 2020 to 2022, and this is for hybrids. All right, this is including hybrids and plug-in hybrids. If we go ahead and pull up their stocks, see how they're doing. So if you look, they got to as high as 2587. Once again, this was a pandemic stock that rose as we started moving towards EV companies like Tesla. They ended up rising as much, but they're currently going back down, getting to as low as 1337. This is currently a 3-year chart dating back to 2020. They were as low as $4.52. So you could have made you a nice killing had you bought this stock a couple of years ago. Currently on the decline, currently at 1337. So basically lost half of its value since they got to the high back in the earlier year. So this is a stock that you're into or you bought at a high. I'm sorry. This is a stock that you still believe in. We'll go ahead and see what happens. We can even expand the time frame and see. The last 15 years, the stock has been, I mean, this isn't any of my favorites. But if you like it, hey, I love it, right? Yeah, this is the ugly chart. I'm not even gonna lie to you. Let's see if we can go even further. I mean, this is a 15-year chart. So yeah, that's Ford. Moving on to the primary elections, we did have some more elections take place in Ohio and Indiana. Couple of takeaways. You still have some people voting for the previous president, or at least the people that he likes. We have over in Ohio, we did have a Republican Senate primary win. And I believe also in Indiana, we also had another person who won. So in Ohio, we had JD Vance who won. And in Ohio, we had Mike DeWine who ended up winning. So 1 second. Yeah, so a couple things we want to watch, 6 takeaways. We still have Trump is still the GOP primary mover. We have Vance who won. We also have Ryan and Ray who ended up winning for the Democrats. GOP is still showing some strength. But here's what scares me, right? Anytime there's been a recession, or more often than not, the party that's in a recession tends to be Republicans more than Democrats, right? I'm not here to be political. I'm not here to say just way on one side. But anytime there has been a recession, it's been it has been Republicans were in office, right? So if the Republicans do take more seats within the Senate and the House, this will end up blocking the Democrats from passing any more measures, and basically make politics extremely hard to the next president. This is why these elections, the midterm elections, are so big, because if you're being blocked at every measure or everything you take to make change, you're gonna have issues, right? This is why a lot of times in midterm years, you have the stock market basically around low single-digit numbers as far as growth. And then once those clear, especially the year right after, you tend to have high double-digit growth within the market, because now the market knows who's in the office, they know what to expect, what measures to take, and those sorts. So something to watch as we continue with these primaries and with these votes. The big election will occur in September, I believe, September, October. So something to watch for. Something to watch for. Now, if we can go ahead and talk about earnings. 1 second. I will be adding earnings to these talks. Reason being is that earnings are very important. They happen quarterly for each company. And it basically gives you guidance it's basically a report card for companies and stocks as what they're doing and how they plan on getting past any headwinds, any challenges, and things of that sort. So let's go ahead and look and see who crushed it. We have Progressive Group. They ended up being their earnings. Here in this column is where you have your estimates. And in these 2 columns is where you have your actuals, right? So Progressive ended up having a less desirable earnings. They wanted to bring in at least $1.15 per share, and the missing only getting $1.10. And if you look past month, the stock has been sliding as well. If we were to go and look at the next day, one company that I like, AMD, crushed it, ended up crushing it. Now, if you look at this chart, it won't look that way, but they had an amazing quarter. The estimate was 91 cents, they ended up bringing in $1.13. Let me go ahead and do this for the people. I'll show you how they did in earnings. So the next one, I'm gonna pull up their previous quarter. I'm gonna do this. Investor relations. If you were to go here, yeah, this happened last week. If you look quarterly revenue almost, I'm not say almost double, but look at that, 71% year over year. Crushed it. Record revenue, $15.9 billion. Gross margin, 48%. So for every dollar they keep them 48 cents. Operating income, $951 million, or 60% of revenue. They have been crushing it, which is why if you were to look at their stock around that time, let's see if I can pop up this chart. Look at the past 10 days, their stock jumped from when they closed at $91 and got to as high as $98. You still have the stock, the market declining for multiple reasons, but this is one of my stocks that I really like a lot. Really, really like a lot. So if we were to go back to calendar, AMD crushed it, Pfizer crushed it as well. If we were to pull up their stock, if you remember, they're one of the people who had a COVID-19 shots, got to as high as 61.70, currently at 48.60. They also beat within their earnings. The estimate was $1.47. They ended up pulling in $1.67 per share. We also have CVS. Their estimate was $2.15. Then ended up beating it with $2. A company that did miss is Bookings Holdings. Now they handle all of the of those sorts. If you look, they expected to get basically 90 cents. Their actual accounting ended up coming out to $3.90. If we were to look at their earnings, you tell that they actually beat. So my apologies, that they ended up beating their earnings. So if we were to look and see what their chart did, you can see that jump. So they closed at 21.03 and then opened the next day at 23 or 2300. So vacations are opening back up as the economy opens up. So yeah, that's why it pays to understand your market, understand what's going on around you. When the economy basically. And then you have energy companies like Shell and ConocoPhillips that also beat their earnings. Remember, gas prices have been going through the roof. And there have been energy companies who have been pushing off expenses and even raising expenses when they didn't have to. So of course, some of those companies definitely did well. So if you look, Shell, estimated per share was $2.07, but their actuals was $2.40. So they beat. ConocoPhillips ended up beating with the estimate of $3.03, and then brought in $3.27. So nice little beat. Also, another company that a lot of people might like, you have Budweiser. They estimated to bring in basically 61 cents per share, and their actuals that they brought in was 67 cents. So if I were to pull up their stock, this is another stock a lot of people sleep on. I gave y'all Coca-Cola. If you look, while this is a pretty bad chart for the past 15 years, if you were to look, let's look at this. If I change this to a 3-year chart, this company right here, typically hold well during recessions. Reason being is during recession, people are sad, people And unfortunately, some people like to bring it. I'm not here to make light of that. I'm just here to be honest. So if you look, for the year, they opened at $63.95, currently at $54. Um, Basically building a base around the $54 range. Yeah, but this is a company that typically holds their value pretty well. They get to a high of $102, and this is back in 2019, pre-pandemic, and it dropped to as low as $32.58. Um, Stock of the week. Stock of the week, what stocks I like is Systems. Cisco Systems. Now, if you look, currently open the week at $49.34. Currently closed today, and once again, today's Monday. They closed at 48.96. Previous week, they closed at 48.48. You have a market cap $202 billion. Now, Cisco Systems is designing and selling technologies across networking, securities, collaborations, and applications, and the cloud. They operate in 3 geographic segments like America, Europe, Middle East, and Africa, Asia Pacific, Japan, and China. Its products and technologies include infrastructure platforms, applications, securities, and other products. The infrastructure platform consists of its core networking, switching, routing, data center products, wireless that are designed to work together to deliver networking capabilities and transport stored data. Applications products or application products category consists of primary software related offerings, core networking. Now, the reason why I like Cisco Systems, being 100% honest, more people are going back into the office. More people are going back into the office. The reason why that's big is because they are the largest player in communications equipment, right? So I told you the market cap at $2.2 billion. The next company after that is Motorola at $33.8 billion. So they damn near triple what Motorola brings in as far as their market cap. Now, here's why they're big. If I were to change this currently 3-year chart, make this a 5-year chart, you can see this stock has done nothing but grow since for the last 5 years. Their last low was 30.36, and this was in August of 2017. Their performance, 1-year performance, are down 6%, but the 2-year performance are up basically 20%, and the 5-year performance, they're up 43%. So if you put in $100, you would have made $43. Now they are currently down from a high of, or they're down 23% from its high of $64. But this is a company that I do like a lot. Once again, with us going to the metaverse, companies going more remote and virtual. You'll see more people going back into the office or working from homes. And if they're starting to work back into the office, people will then start having to build back up the technology, right? A lot of those equipments that they use are outdated and aren't being used as much. So there should be a big swing in this stock, in my belief. The estimated sales growth is expected to grow at least 6.1% in the fiscal year 2022. They also recently purchased Hexagon, which is an application monitoring company. So that will add some more revenue to them. If we were to look at their fundamentals, second. You can look at their fundamentals and see how they're doing. Once again, I'm a fundamental trader. So I like for things to make sense. If we were to look at their income statement, you can look at their stock. Their high, the 5-year high of revenue came in 2019, so 51.9. And then 2021, of course, there was a dip from 2019 to 2020, but they're slowly trying to build to get back to that previous high. The their operating expenses typically stay around 35 billion to 37 billion. You can see each year their operating income has declined, so it is something to watch. But their revenues are staying consistent. If we put their quarter, you can see how they're doing as far as quarterly increases or quarterly revenue. If we were to compare as well, you can also pull up the analyst report and you can see it even clearly over here. So I have it highlighted. You can see their revenue since 2012 been between 49.9 to 46.1. You also see their operating income here increase year after year after year until we get 2019, to where it starts to, kind of shoot downwards. But once again, I mean, that's with companies and individuals working more virtual. So I do expect to see an uptick there. The return on equity, you can see how much they bring in year after year. With the past 3 years, you've seen a jump on the return on equity. But this is a stock I really, really like, really, really like. They are in the communications equipment space, so you can see how using this chart over here, how they fare against the S&P or against the NASDAQ and against the S&P 1500. This is currently showing how everything is down. But year over year, this space is up around 60%. So that's the stock of the week. That is the stock of the week. Now, for the tip of the week, let me go ahead and show you guys this. I don't get excited for my portfolio, but I do get excited whenever the fear greed index comes up. So here's what this is. Fear and greed index. This lets you know the market sentiment. This is the market sentiment. So what that basically is, hey, the market is terrified, currently terrified. Neutral is around 50. Greed is around 75. Extreme greed is 100%. Anytime the market is here, you tend to see the market at all-time highs. So if I were to pull up the S&P 500, if we were to go back and look, 48.660 or 48.18, if we were to go back, pull up this timeline, you can basically track where we were. November, extreme greed, 77%. 77%. Now, if you look and go back, we're currently at 39.91. And what do you know? Fear and greed index, extreme fear, right? I like when we're here because this lets me know either we are overreacting and I can make a great killing on the market. If you look at this chart right over here, we have everything in orange is 125-day moving average. We're below that line. So if we were to take the last 125 days, our average is around 45.04. Once again, we're currently at 39.91, so we're clearly below it. Clearly below it. This is why I get excited, because anytime we get below it, I want to buy back up because we know eventually we'll get to at least the average. It's not a matter of if, but a matter of when. So if I know a lot of stocks are oversold, then I want to buy as much as I can. I want to buy as much as I can. You can see a lot of companies, look, extreme fear. Market volatility using the VIX, I showed you guys earlier, extreme fear. Fear using safe haven demand. Junk bonds, extreme fear. Only thing showing extreme greed is the stock price spread, right? So To me and others, this is extremely, extremely great because now I can buy stocks at a discount. I can now buy stocks at a discount. So this is something I want you guys to watch. Whenever you see us at extreme fear, this is the best time to buy. And anytime we're at greed or extreme greed, you want to be careful about your buying. 1 month ago, we were neutral around 46. A year ago, we're at 48. Today, or previous, or yesterday, or last Friday, we were currently at 31. We dropped by 9 points. So once again, this is the fear and greed index. A lot of people use this as a time to when they want to buy stocks. So this is Stockommon Cents. I hope what I'm bringing you guys is valuable to y'all. Once again, I have a stock club that is available for those who want to jump in and purchase. I give insider tips. If you like this fear and greed index, I have more tips for things to use for your fear and greed index that can help you become more profitable. I wanted to get this out to you guys. I know I missed last week. So if you appreciate it, go ahead and hit a like, go ahead and subscribe, share it with some friends, and I'll see you guys next week.